Moving on then, yesterday the government clarified its stance on FDI into e-commerce. It explicitly states that 100% FDI is allowed into online marketplaces. Our managing editor Shireen Bhan discussed this issue with two very special guests. Take a look.
The DIPP issued guidelines late last night on FDI into e-commerce companies. While these guidelines have largely been welcomed by industry, as they say, the devil lies in the fine print. And as we examine the fine print, there are more questions than answers. To decode the fine print, joining us Ganesh Prasad, partner at Khaitan and Company, and Sumant Kasliwal, the founder and CEO of 20dresses.com. Gentlemen, appreciate you joining us here on CNBC TV 18. Sumant, let me start by asking you, because 20dresses.com is a single brand retail entity with an inventory-led e-commerce model. So to what extent will companies like yours be impacted? Because the guidelines issued yesterday by the DIPP very clearly say that FDI will be disallowed in inventory-led e-commerce companies. How are you reading this particular clause?
My sense is, if you go by the spirit of what they want to achieve, I think single branded companies products e-commerce should be allowed with FDI. There should not be a problem. What they specifically told about inventory-led model will not be permitted for FDI is keeping in mind people who are selling multi-branded products, which are not sort of a marketplace in a technical term, but are multi-brand e-commerce companies.
So you believe that you're safe because you're following the guidelines of the single brand retail policy, but I do think that we will need an explicit clarification from the DIPP, because this is an issue that companies like you who do follow the inventory-led model will need to address. But another clause that's largely brought share, especially as far as the offline companies like the Bianis of the world are concerned, is when the policy says that e-commerce entities provide marketplaces which will not directly or indirectly influence the sale price of goods or services and shall maintain a level playing field. Now, this pretty much prevents the big boys from deep discounting practices. So is this positive for smaller, more niche players like yourself as well?
I think it's hugely beneficial, both from a short-term perspective as well as long-term perspective. I'll tell you why. I think all the offline retailers who have been crying sort of foul for having a differentiated policies for e-commerce companies, and who are sort of using these, in my mind, unethical or predatory pricing, I think they are to an extent right. You've created this market. There's no doubt about the fact that all these e-commerce companies and marketplaces have built such a large market, and it's to their credit. But deep discounting hurts across the board, whether it is offline retail or online retail, or people like us who are trying to build a sane business model, trying to sell products on virtue of the quality of the product and give services to the consumers. I think what has happened is that the customer in turn has got used to these kind of freebies and discounts, the kind of services which these companies give, on the back of huge amount of funding they have received, which not everybody has got. So if you really see e-commerce in India, there's a huge, large, long tail to it. There's just not 3 or 4 marketplaces who are running the e-commerce, though size is definitely there. But in the interest of the business, the industry, and having a fair business practices, I think this particular clarification has come as shot in the arm. I think a lot of sanity will kind of prevail now. People will talk about more profitability. People will talk about right kind of doing the business in the right fashion.
Okay, so that's the good news then as far as you're concerned. But Sumant, let me revisit that first issue. If the clause regarding the inventory-led e-commerce model was not to be clarified to the effect that even single brand commerce players cannot access FDI, which is what we read the policy to mean at this point in time, what will it mean for you?
I think it would have a sort of negative impact, because the business we are in is capital intensive. And there are lots and lots of companies who have built their businesses the way we have built as 20 Dresses. And if you are unable to access capital, which is largely coming from international markets today, which is dollar denominated, I think we'll have a huge problem in raising funds and thereby growing our business. So I personally think that if you go truly by the spirits of what they want to achieve, this clarification will come, and single branded product companies should be able to do e-commerce and get FDI. So I don't see that much of a problem. But yeah, I mean, if that doesn't happen, I think we'll have tough time raising funds.
So you're saying it will mean a death knell for companies like yourself if there is no clarification. Let me go across now to Ganesh Prasad, partner at Khaitan and Company. Ganesh, appreciate you joining us. The implications of the guidelines for marketplaces, in particular, those in which a single seller makes up over 25% of sales. For instance, Flipkart and WS Retail and Amazon and Cloud9. Do you believe that this is going to force significant restructuring? Will this now be very restrictive for companies like Flipkart, Amazon, and of course a whole bunch of others?
The press note itself is clarificatory by nature, and I think some of the players that you just mentioned, I think they are going to be affected because they have certain arrangements, whether it is in terms of their sourcing or supply model, in terms of how they are sort of selling their goods, because technically a lot of their income is effectively coming from different from the same entities. Given the nature of this particular press note, it just says that it is clarificatory by nature, and it does not sort of mention that people who are already in this particular play are sort of exempt from it, making it retrospective in my mind, unless of course the government comes up and sort of clarifies that this will not sort of apply to certain of these players who are already in it and is only for future players. They will have to sort of look at some kind of a restructuring.
But Ganesh, on that issue that I was talking to Sumant about, this business of deep discounting being done away with, or at least the government putting in guidelines to prevent deep discounting, but it doesn't mention specifics of pricing, discounting, who is going to be the judge of this. How do you read that, and what do you foresee going forward?
See, I think some kind of, this currently what the policy says, it basically says that, listen, you cannot sort of influence the prices of the products on your marketplace. Now, can somebody adopt some kind of clever structuring by sort of saying that, listen, if you were to sort of achieve X amount of sales on my website, then I will incentivize you in a different form. That's something which, this particular press note does not sort of cover. I mean, that's something which is open to interpretation. Now, if the government were to really sort of close the loopholes on this, they should possibly sort of, in my mind, make this particular restriction a lot more robust by saying that you will not benefit directly or indirectly out of such offerings, and the marketplace will have to be a clean place which sort of is just a marketplace and not something where the vendor and the seller have any kind of a pecuniary interest.
All right, Ganesh and Sumant, we will await those clarifications from the government, but I would imagine that some sort of clarification is likely. But thanks very much for your time, and thank you very much for joining us and decoding the implications of the guidelines related to FDI and e-commerce issued by the DIPP last night.